Today is Monday, July 17th, and this is the ADM Investor Services Monday Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Mike Nemec, ADMIS Grain Analyst, and Alan Bush, ADMIS's Senior Financial Economist. Mike, there's been a lot of market volatility since the middle of June, and weather has been the primary factor. How do we stand on weather right now, and what is the market looking for?
Where we are with the weather right now, we had started off this week on somewhat of a somber note. A lot of people think that we come in over the weekend and we'd have a sharply higher, sharply lower opening because of weather. The weather forecast this morning came out somewhat of a mixed bag for everybody. There is, in the near term, there's rains up north, no rains down south. It's going to be hot and then cold. And then we're not really seeing a pattern of where we're going to really harm the crop going forward in here. So as a result of that, I think that the trade is a little bit uneasy and not committed to which way the weather's going to go. So thus the influx of no price volatility. As we go forward also, there is a little bit of less chance of rain and maybe a little bit of heat, so we still got to keep an eye on it. So it's not out of the woods as of yet. The other important thing where the markets stand here today, I thought was the important thing was the Commitment of Trade report that came out on Friday. We saw where the trade was much more net long the softwood winter wheat than we thought. We thought they'd be net short the corn and the beans. Actually, they were net long the corn and the beans. After the report that we saw from the USDA, they sold the market off, and when it's all said and done with, they're still net long the softwood winter wheat, corn, and soybean oil, but net short the beans and the meal. So between the weather going forward in here and being non-committal as far as the weather forecast goes, the trade wants to see big domes, hot weather, no rain. That's not the case. And the trade pretty much even keel right now. I think that's where the market stands here today.
Aside from the weather and the Commitment of Traders report, what are traders looking for this week? Are there any significant reports?
Well, the important things going forward in here as far as reports, we'll get our exports out here in a little bit. That's the demand side of the ledger, which the trade is very not interested in at this point in time because supply is, that being weather. Number two, later on also this morning, we'll get a monthly NOPA crush report coming out for the soybeans. That too is expected to be somewhat supportive to the bean market as it has been in the past month, but there too is the demand side of the ledger, what the trade is not really looking at. What will be important today is the crop condition numbers that come out after the close. The crop conditions not as bad as spring wheat, but the corn and the beans have been coming on down, and we'll be looking at those ratings. They are looking for them to come down 1 to 2. So in conjunction with the crop ratings, where the specs are right now, and the weather forecast going forward, those will be the important reports in conjunction with the other factors that the trade will be looking at as far as price determination.
Mike, how about giving us some price ranges in the grain markets? What would be some significant areas of support and resistance?
Well, I'm going to even it out right now and just to say we're a little bit below $4 December corn. We're kind of right at $10 November beans. And I'd have to say that prior to this whole run-up that we've had over the past since the middle of June, the trade was generally talking about a $3.25 type area for December corn from the $4 level. And from the $10 level in the beans, maybe down to $8.40. Now, however, we got a little bit of excitement in the marketplace, which has calmed down right now, and people were talking on the upside of maybe roughly $4.75 for the December corn and maybe as high as $12 in the November beans. So here we are, even keel, and I'll sum it up with this. We're right at $4 roughly and $10 beans. The trade is pretty much net even. We're going to be watching crop ratings. The weather's kind of net even also as well. And the combination of all those factors will help determine if we're going to go and try and test those lower levels pre-rally and or are we going to go test these higher levels because we're running into crop rating problems and the weather gets a little bit more adverse during the month of August.
Shift over to financials. Alan, we saw some weaker than expected economic reports last week, especially retail sales. What effect does this have regarding the probability that the Federal Open Market Committee will increase its Fed funds rate at the December 13th meeting?
Well, it actually had a very dramatic effect. It lowered the possibility of a rate increase at the December meeting. Earlier last week, we were at about 59%. Today, we're now at just 48%. So the odds of a rate increase from the Fed are diminishing, and I would not be surprised to see the Fed wait until 2018 before they raise rates again.
On Friday and again this morning, the U.S. dollar fell to a new 10-month low. I assume that this was aided by the weaker economic reports last week. What is the current outlook for the U.S. dollar?
Well, nothing has changed. It still appears to us that the dollar index is going to continue to decline. Of course, we did have those weak economic numbers, the inflation numbers and the retail sales last week. Also, interest rate differentials are turning more against the dollar as the Fed is likely to be slow to raise rates while other central banks are backing away from their easy money policies. So the trend is still the same, lower. Look for continued weakness in the dollar index.
Despite the weak reports, the S&P and Dow futures advanced to new historical highs on Friday. How to explain the continued strength in the stocks overall? Is it all interest rate driven?
Well, it is. And it seems rather odd that stock index futures can advance to new highs when we had such very negative economic reports on Friday. And the reason is these reports are causing analysts to believe that the Fed may not be as hawkish as some had thought. So everything in the financial markets predicates on what the Fed is likely to do. So actually it appears that the bad news may in fact be the good news again in how it affects Fed policy. So stock index futures most likely will continue to advance, and we feel that this is a trend that will probably last all this year.
Okay, remember the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.